What's up? I am live. Give me a sec. Let me just do an audio check and I'll start yapping. And for those who don't know, my name is Brian Ramirez. You're watching Brian Ramirez TV, where I just shit talk. That's all I do, just shit talk. I got my wisdom teeth removed, guys. Wait, can you see it? I got my wisdom teeth removed, and I'm very lightheaded at the moment. I'm on some like really good, good painkillers, and I'm drinking pineapple juice to ease the swelling. All right, so you're probably watching this and you're wondering what we doing, what we trying to, what's the point of this, right? So I'm not trying to waste nobody's time. Am I gonna be back testing? Yeah, but I just want to talk. I'm very bored at the moment because I can't do much. I do have to like do some computer work, and at the same time I want to talk, so I'm just gonna do this. Back testing, right? How this works and what I look for. I guess what I would back test would be the daily chart, and what I would look for is the opening range gaps that have been left in previous weeks and the new week opening gaps. So the new week, my new week opening gaps will always be red, and my opening range, my new day opening range gaps, my new day opening range gaps are orange. And just look at how on Friday we went straight to Tuesday's opening range gap. Look at that. That's absolutely perfect. Do you see how perfect that is? But I guess I do have a strategy when it comes to backtesting. When it comes to backtesting, my strategy to doing it, the way I do it is I plot all the PD arrays that are important, like the new week and the new day opening gaps, any fair value gaps, and I look at the institutional sponsorship of the candles. For example, this was a new day opening gap, and look how we close. That's consequential encouragement, and look how we close below consequential encouragement. And that's a signature to me that price wants to go lower, but yet we went back higher up. That's fine, because the narrative is we want to keep going lower. Because look at how this body is not closing above the consequential encouragement. If this would have closed above consequential encouragement, I would have still been bearish, but I would have assumed price would go up here. So what I do on the weekends is just I look at institutional sponsorship. That's all I'm looking at. Just where are the bodies of the candles closing and where are they opening? I want to talk about my losses and why I take so many, right? Where am I failing the most? Because I've noticed that I fail when it comes to these moments where price is just consolidating. And I gotta find a way to recognize when I'm trading inside a range that's consolidating. Because many times I'll see price go low, and I'll start trying to go long. It goes higher, but I have such a huge take profit, such a large take profit. Price will come back, stop me out. I either lifted up my stop or just goes completely into a deep retracement, and I get stopped out. And that's usually in a high resistance profile. So the question that's in the air at the moment would be, what is a high resistance profile, and what is a low resistance profile? Those are the two main questions at the moment. So these are the fund challenge accounts I have. We're really close at losing it. We only have like $335 $335 worth of capital. Are we going below the account? Only God knows. I don't think I will. If I live stream and I try to make it back, yeah, we're blowing the account. But if I take time, if I do it in my personal time, I'll bounce back. This is the other account that I'm working on. I'm not really trading this one because I want to take my time with it. This is more of a personal account than the other account, which I'm live streaming with. I like these moments of uncertainty because it's like, is it getting in my head? Like you gotta think about it, right? You let me just go here. You really gotta think about what's going on here. You gotta think about, like, I only have $335 to work with, and I'm live streaming. And then during that live stream, I'm gonna think, fuck, if I take another loss, it's going to cost me to emotionally trade. I want that pressure of, when I get those thoughts of doubt, will I be able to ignore them and focus on price action? Or am I going to focus on the thought and ignore price action? Now we could talk about high and low resistance liquidity runs. What does a high resistance liquidity run look like? Right? What is it like? And it looks like this. This is exactly what it looks like. No fair value gaps. What is it? High. Oh my goodness. What is a high resistance profile? Well, it's no fair value gaps. That's for starters. It's consolidation. And it's what? It's deep retracements. What's a low resistance liquidity profile? What does that look like? It's fair value gaps. It's shallow retracements. And it's what? Expansion. Expansion. Yep. That's how I define it. But now let's talk about the psychological aspects of it, right? When I'm trading and I'm in drawdown, as we could see from last week, when I'm trading, I'm in drawdown and I see high resistance, I forget about what they look. I forget what a high resistance profile could do to me. Why? Because even though I acknowledge, oh yeah, it's high resistance, I'm not thinking, oh, it's gonna stop me out. I'm thinking it's high resistance. I'll just be more patient. And patience isn't enough because in high resistance liquidity runs, the moves are just too deep. They're just too, you can anticipate it, but it's just when you're not fully focused, it's gonna eat you up, and it's eating me up when I'm live streaming, because I know, okay, when I go in, it's gonna, if I don't go in and it moves without me, I'm gonna miss a move, and it's high resistance, so there's not gonna be that many opportunities. And so because I know there's not many, that's another, not many opportunities. I definitely spelled that wrong. Opportunities. I'm just missing a P. There's not that many opportunities, right? In high resistance liquidity runs. So I'm forcing a trade because I'm aware there's not that many opportunities. So I'm trying to get in before I either go to work or I got stuff to do that day. Then this would be many opportunities. Let's see, backtest programs. What should we look at? Y'all want to look at my manifestation board? This is what I want in life. I want to be a pirate. I want to own a ship. I want to sail around the world. I want to fight a storm. I want that watch. I want like a watch that has a bunch of diamonds on it. And then I want a Ferrari. SF90 would be nice. Oh yeah. I want to travel. I want it to live in a vineyard. I want a bigger trading desk. I want to live in a skyscraper. I want a Lamborghini. I want a family. I want to live here one day. I want to praise Jesus and make it into heaven. I want a ring with my last name's initial for my pinky. I want to read a whole lot more books. I want to live in a castle. Yeah, this is my manifestation board. Let's study this. Head and shoulder patterns. This is actually how I started. I was looking for head and shoulders patterns this whole time. Head and shoulder patterns, right? We have a left shoulder, a head, a right shoulder, a neckline, a retest. Start going lower. See, shoulder, head, shoulder, neckline, starts going lower. Awesome. But guess what? There's no retest. Comes back up. Why should smart money care about head and shoulder patterns? It's a retail reversal pattern. It's always in the charts, easy to see. Retail trap. So shoulder, neckline, head, shoulder. It does not take out the neckline and continues to take out the head. How price fails to break out of the neckline. How price fails to break out of the neckline and rallies higher. This is usual for your head and shoulders pattern. Yeah, so it's normal in a buy program. So in a sell program, we could see something like this, right? Where shoulder, head, shoulder starts dropping back lower. But in a buy program, we don't want to see the neckline get taken out, right? We want to see the head get taken out in a buy program. So what would constitute as a buy program? Well, you see how there's the head here, right? Let's say we have a fair value gap up here, or we have a, your PDR, right? The PDR you could spot on the charts. Let's say you see it here, and in the lower time frames, you see a head and shoulder pattern. Well, it's a set and done deal. We have a head and shoulder pattern, which is a retail concept, and we have an ICT concept above here. The ICT concept is going to outweigh the head and shoulders pattern, and it's going to go. So it's kind of like it's confirming itself. If there's an ICT concept up here, and you know price wants to go higher, you then know that if you see this retail pattern of a head and shoulders pattern, it's a set and done deal. It's going to go and take out retail stops. Why did it fail? There's a slide of, I feel like I'm pulling like Hennessy right now. Why did it fail? Oh shit. Why did it fail? There's a slide of hands that people don't acknowledge. Retail doesn't understand narrative. It's not the pattern that doesn't work, but the lack of knowledge there is. Yeah, it's not the pattern that doesn't work, but the lack of knowledge there is. You know, a head and shoulders work. They work when they're onside the buy or sell program. When they're not onside the buy or sell program, they don't work, but they do. Retail stops. The breaker pattern. For every head and shoulders pattern, there's a breaker pattern. I don't really want to get into breaker patterns. It's not like it's kind of like ICT's breaker, but it's an actual pattern I've noticed. But you see, it goes back up higher, takes out retail stops. That's a head and shoulders pattern. Head and shoulders patterns work. There's smart money logic behind it. Wait, head and shoulders patterns work when there's smart money logic backing it. They never look like the picture. That is true. So, shoulder, neckline, starts going higher. Right? That's the head and shoulder. It went higher, it took these stops up here. And you can say shoulder, head, shoulder, neckline, goes back lower, comes back to the neckline, starts going back lower. Now let me ask you, is this high or low resistance? This is high resistance. Now, from this low up to this neckline, would that be high or low resistance? That is low resistance. Let's get very... Actually, let's just finish this, but we'll come back to this. Smart money bought at the balance price, wait, BPA? Oh, smart money bought at the buy program array. What's a buy program array? It's just an old concept I came up with. Smart money bought at the buy program array. Right, head and shoulders, here's the neckline. Now we gotta go to 2. 2, there was a draw on liquidity. This is the draw on liquidity. 3, there was a sweep of engineered liquidity. So this is L, that's an engineered liquidity. It swept it. 4, balanced price range was supporting price higher. And where's 5? Well, I guess 5 would be we take out the buy stops up here, right? Head and shoulder, neckline, go back up higher, and guess what? We come back and take that low. Yeah, neckline, shoulder, head, shoulder, goes back up, tags an ICT PD array, and guess what? That is our engineered liquidity. Wait, so yes, let's say we're in a buy program. ICT concept up here, lower time frame, there's a head and shoulder pattern. The head and shoulder pattern is our engineered liquidity. Why is it engineered? Because it's a retail pattern and there's a smart money concept supporting higher prices. This retail pattern is saying that price should go lower for the retail trader. We eat retail traders, so we trust it's going to go back higher. This is what I was using back in the day, back when I was starting. There was something I want to talk about, right? There was I guess it was this image from down here to up here. That's low resistance. Let's stay on that topic. Let's talk about that right now. Let's talk about high and low resistance liquidity runs. So let's label it high, low, high, and low resistance liquidity runs. Let's talk about these Johns. High and low resistance liquidity runs. Buy and buy. Let's talk about that. So high and low resistance liquidity runs and buy or sell programs. This right here, high resistance, right? We could label that high resistance. And we're in a sell program, but it's high resistance. It's a high resistance sell program. From right here, beep, boom. Oh. Let's just take that off. From right here to here is a low resistance liquidity run because we have a fair value gap. Now, let me ask you a question. Can a program exist inside a larger program? Because overall, right? Overall, we are in a high resistance liquidity run. Why? Because we're going deep into first and second quarter. We're going beyond first and second quarter of the candles. Wow, blow your brain. Look at this candle. Oh, isn't that nice? Look how we're going beyond first and second quarter. I know, look at the bodies. The bodies will tell the story. But look at how we're going beyond the first. This is first, this is second. Look how we went beyond it. And we're at the deep premium. Look how we're going at a deep premium, right? We're high resistance because we're not finding resistance at first and second quarter. First and second quarter levels is my concept. It's not an entry technique, so if you ever use it as an entry technique, good luck. You're gonna lose a bunch of money. Trust me. First and second quarter levels are just a measurement. That's all it is. Price goes above there. High resistance. We're overall we're high resistance, but from here to here, we're in a low resistance liquidity run. That's possible. I want to bring that to your attention. High and low resistance liquidity runs and buy and sell programs can exist inside larger programs. Can exist inside larger programs. You know, so there's short-term programs and there's long-term programs. Short-term programs and long-term programs. And I would say there are intermediate, but that's like putting a middle. You know, it's, how do I explain it? It's more clear if you make it black or white. If you start making it a little gray, you'll be in the gray. So make it black and white. So short-term programs and long-term programs. That's a short-term low resistance buy program, right? This is a high resistance sell program. So when you see me grabbing my fib and you see me putting in some random candle or location, it's not random. I'm actually measuring stuff. I'm measuring if we're in a high or low resistance liquidity run. Because by measuring the candlesticks, right? Let's see. I know we're in a low resistance liquidity run. Why? Because we're having shallow retracements. We retraced into this previous candle, but it was a shallow retracement. The expansion. So if it's a shallow retracement, I should expect expansions, and I should anticipate multiple opportunities inside this new candle opening. That's just basically what I do with the quarters fib. I don't really use it as an entry technique because it's not what I use. I think, yeah, that's enough for that, right? Because it all ties down to what I was saying about the funded challenge account and getting caught up in high resistance liquidity runs, because since I could see shallow, because I could see the long-term narrative and the short-term narrative, I tend to get in the short-term narrative, but the short-term narrative doesn't last long. Let's say we were here. We're here in a high resistance liquidity run, right? And then down here, we're in a low resistance liquidity run for a little bit. But guess what? We start coming back down. That's what shoots me in the foot. I forget that the short-term programs are Judas swings, and the long-term programs are what I need to be anticipating. There's more I guess I need to look at. Usually on the weekends I look for the seasonal charts. I look at what the market's doing, what it wants to do. I'm getting a call. Give me a sec. I'm back. I got more juice. I'm running out of my juice. Okay, that's enough for backtesting. Let's shit talk now. Let's talk about Dixie. Oh yeah, I'm a shit talk on her. Like, what's up with Dixie, right? She's been like acting different Since I've met her, she's just hasn't been the same. Like, she's not the girl I used to know. She's all making large wicks. She's consolidating. She's not expanding anymore. Do you guys remember in November? You remember in October and November, how she was just expanding and expanding, and we all thought like she was just gonna go back to the what do you call it? Go back to the 115s level. Twitter was going crazy. They're all like, "Oh yeah, Dixie's back up. Everything's going higher," and look at her. She's just consolidating now. Bonds. That fucking bit. No. Bonds. They're wait, why do I have that? Sometimes I just put some graffiti on the charts and I forget why I do it. Close and then reopen. That's kind of perfect, you know? I don't want pride or anything, but that's very close to perfect. Didn't call it live though, but very perfect. Let's go to a 12-month. What y'all know about the 12-month? We're going to a 12-month and awesome. That's awesome. Hit first quarter. What does that mean? What does it mean when price hits first quarter? Right, Brian, talk about first quarter levels. Quarter levels. Let's talk about them. First, second quarter level, and then we got deep. Actually, I might need. Let's do that. Let's talk about first and second quarter levels. Brian Ramirez. Concepts. Brian Ramirez concepts. Wait. Actually? Yeah. That's what's up. Yeah. Brian Ramirez, ebb and flow concepts. The ebb and flow is the name for my guidelines. Ebb and flow. Man, you guys don't even know what that means. Let's teach. Well, let me give you in on some of my tools. Let's talk quarter levels. Quarter levels. Quarter levels. Quarter. What is going on here? Come on. Quarter. Come on. There we go. Quarter fib. This is called a quarter fib. I'll show you the fib settings right now. Let's look at them. So 0.5, 0.75, 0.25, and 1. That's a quarter fib. It's divided into quarters, you know. 1, 75, 50, 25, 0. Let's talk about my concept. First, second quarter levels. What is it? Why do I use it? Why is it important? How do I use them, right? First and second quarter levels goes back to institutional sponsorship. So let me tell you the quick story on how it's correlated, right? Why is it together? Well, when I first started watching ICT, he would talk about this word called he would talk about institutional sponsorship, and I was having a hard time understanding what does that look like. What is that, right? He's saying look at the bodies. I'm looking at the bodies, but I don't understand what the bodies are saying, and that's where like he mentioned something about the algorithm referring back to the high, the open, the low, and the close of a candle, and then that's where I said, wait, the open, the high, the low, and the close, the body, the wicks. The body has the most narrative. So if I divide the body into quadrants, all I have to do is find the institutional sponsorship there. You picking up what I'm dropping? So I put the quarter fib, and I was looking for institutional sponsorship at the very first quarter levels. And anytime price would go to the first and second quarter, that's where I want to see price to start reacting, right? Start reacting off of it. This doesn't go deep, so that's good. But let's go to a daily. Let's go to a daily. Actually, let's go to a weekly. Let's go to a monthly. So we got a 12 here. Let's go here. Awesome. Look, price. This is a previous candle. First and second quarter. First quarter's hit. We start going back lower. Go to this candle. First quarter gets hit. And then we got the premium, right? Let's go back to the 12-month. So once I started seeing responses off the first and second quarter, I didn't realize that's the institutional sponsorship. I want to see institutional sponsorship of any PD array, any and every PD array any and every PD array if any and every PD array if price is in a low resistance liquidity run, should respond off of the second quarter level. Second quarter level. Now, right before your brain blows up with like excitement, what's the opposite? If price goes to a deep premium or deep discount. So what's deep premium? What's a deep discount? So here's equilibrium. Above equilibrium would be a deep premium. So basically third and fourth quarter. Below, let's say we're looking at the bullish stance of it, because that's the bearish. This is the bullish stance. First and second quarter, and this is the deep discount, or third and fourth quarter. Institutional sponsorship, any and every PD rate, if price is in a low resistance liquidity run, should respond off of the first and second quarter levels. If price goes to a deep or deep premium or deep discount, what can we assume, guys? Like, come on, I'm gonna play Dora the Explorer right now. Vamonos, what? Tell me, what do you think it means when price goes to a deep premium or a deep discount? It means we're in a high resistance liquidity run. Holy shit! Wait. So if we go beyond a first and second quarter level, and we go here to the third and fourth quarter, we're in a high resistance liquidity run? Yes. So what does that mean? That means that we're going to have what I mentioned before. Let's see, what I mentioned before. No, there's not going to be that many fair value gaps. Price is going to consolidate. There's going to be deep retracements, and there's going to be not that many opportunities. That's all you need. Once you don't let me lose you now, right? Because I'm gonna tie this all up with psychology. Just stick with me for the moment. Just hold my hand. Hold my hand, baby girl. Just trust me. Oh shit, I lost my train of thought. No, I didn't. Okay. When you start trading. Oh, praise Jesus. All right. When you start trading, you are insecure of when to get in, insecure of when to get in, and unsure when to stay out. You're unsure when to stay out. Why? Where does this come from? Right? When I live stream and it's high resistance, I know there's low probability of having opportunities. There's not that many opportunities. There's going to be rarely any opportunities in high resistance liquidity runs. So what do? I look for those short-term. I took that off. I look for those short-term buy programs and sell programs and those low resistance liquidity runs that are used as Judas swings. I use that to get in, and then I get greedy. I hold on for too long and I get stopped out. You guys have seen it on my live streams. Go watch my live streams. So you'll start noticing that pattern with me. Why? If I'm aware of the high resistance, why am I getting in? Because why do I keep getting in? Because, where was it? Insecurities, when to get in, and unsure when to stay out. Because I start getting in my head and I'm unsure when to stay out, right? I'm not using the time aspect of it. I'm unsure when to stay out because I see, okay, we're low resistance. So how do I overcome the unsureness of staying out? If it's high resistance, you could trust for a fact that price is going to have deep retracements. It's going to consolidate. There's not going to be that many fair value gaps, and there's not going to be that many opportunities. Let alone, I need to make the conscious decision to realize that there will be an opportunity. There will be one or two opportunities in high resistance liquidity runs. I need to accept that I'm going to miss that one or two opportunities, and I'm not going to trade that day. It sucks, right? It sucks. But it's so easy to accept that now. Why? Because we know we're accepting it. We're accepting in a high resistance liquidity run, there's not going to be an opportunity. Yes, there will. There'll be one, but we're accepting that it's just not going to be the one we'll take. And we could sit out confidently now, accepting that we know when price is in a high resistance liquidity run. We know if it's in a high resistance liquidity run, we're not going to trade. We're not going to live stream, or we're going to turn off the live stream. Many times, I get into the live stream, I see that we're high resistance, and in my an experience, I would just walk away. I would say, you know what, today is not the day to start trading. I would just sit out. But because I turned on that live stream, I then feel obligated to trade. I feel obligated to sit there and wait for that one opportunity. I know there's that one opportunity. I know it's coming. When you sit in front of your desk, you see high resistance, and you remember back, right? You probably already watched the charts. You remember. I remember that day where price just went 100-something handles, and I sat out because I thought it was high resistance, because I thought price was not gonna move. I don't want that happening again. You have to accept it. You gotta accept if it's high resistance to sit out. You're gonna miss that one good opportunity. But now you know what low resistance looks like. Low resistance looks like price responding at the first and second quarter levels. High resistance, you know, it's gonna be when we're going above the premium, below the discount. Now, that's all good, right? Now apply time. Apply the time frames. If you're trading a 15-minute, you want a 1 hour narrative. See? High resistance. This is high resistance. Why? Look at the quarter fib. It's high resistance. We literally just embodied this candle. So let's go to the 15-minute now. We go 15-minute. Look, we already know what we know. It's high resistance, just back and forth, back and forth. We don't want to be in price action like this. Even though you can see, look, like this right here. What is that? Let's put the quarter fib so it's a little more obvious. What is that? That's low resistance. This is low resistance, but it's what? Long term or short term? It's short term. Let's go to the 1 hour. Was it, well, 15-minute? Where the candle, where this was before. Wait. Is this short term or long term? High or low resistance? We're in a long term high resistance liquidity run with short term low resistance liquidity runs here and there, like this one, that one, that one, but it's not worth it. We're missing that opportunity. Yeah, that's actually, yeah, that's what I look for. So going into next week, what's changing? When I hop on the live, I'm going to look at the high and low resistance programs on the multiple charts. I'm going to define them, and if it's high resistance, I just know nothing. If it's high resistance, here's the difference. Let's go back to the example of, I remember that one day where price was high resistance, but it went 100 handles right after, right? Let me ask you, in that day where price just goes 100 handles, but you thought it was higher resistance, did you bother to ask yourself, is this in a long term high resistance profile, or was this in a short term high resistance program? Because if price is consolidating and it's high resistance for a little bit, but it then expands 100 handles later on, like let's say lunch and lunch into PM session, then you were in a low resistance, you were in a long-term low resistance program, and you just so happened to get on charts in a short-term high resistance program. I hope I didn't lose you with that one. But here, we're in a long-term high resistance profile with short-term low resistance. I don't want to be in those. So next week, when I could define that the long-term profile is high resistance, I'm just turning off the live. That's it. Turn it off. I don't care. I don't care. I don't care. You know, I'm gonna stop forcing myself to want to trade in a long-term high resistance profile. Yeah. But if I could define that price is in a short-term high resistance profile, I'm gonna obviously sit through it and wait for the expansion. Yeah, that's what's gonna change next week. Hope y'all learned something. I know I did. I literally, sometimes I just need to break myself down and analyze myself and be like, okay, this is where I'm falling short, and this is what needs to be fixed, and this is where the issues stem from. What What now? I think that's about it. That's all I want to talk about. High and low resistance liquidity runs. Why I've been taking a bunch of losses. A lot of it's nerves. It's wanting to perform. But slowly and gradually I'm gonna gain that self-control, and I'm gonna grow from it, you know. Well, I'll see you guys in the next one. Take care.